Hi, Jasmine here from Redwood Financial, and this week I am talking about all things to do with tax-free allowances and how you can maximise them before the tax year end. The tax year seems to just creep up on us, and there's always this last-minute panic for us to make sure that we're making use of our tax-free allowances. But first of all, what are they, and what should you be thinking about in terms of maximising them before the year end? Well, probably the most obvious and common one that a lot of people know about is, first of all, your ISA allowance. Hugely important. ISAs are a fantastic investment vehicle, providing tax-free growth, tax-free income and withdrawals as well. So if you aren't already regularly maximising your ISA allowance, it's a great opportunity to start doing it sooner rather than later. The maximum you can put into ISAs for each tax year is £20,000, and it's a use it or lose it allowance. So if you don't use it before the tax year end, you can't carry it over to the following tax year. Now, there are two ways to maximise your ISA allowance. The first one, and the one that I recommend most importantly, is to make use of this ISA allowance through a stocks and shares ISA. That means your ISA is invested into funds that are actually going to be growing actively and into a portfolio that matches your attitude to risk. Now, that is the best way to maximise your ISA allowance, because we're going to be driving growth, and then all of that growth is going to be tax-free in the ISA investment vehicle. If you don't feel comfortable investing into a true investment portfolio, investing in things like bonds and stocks and shares, and you're more cautious, then you might want to maximise your ISA allowance through the use of a cash ISA. A cash ISA that you can typically open at your high street bank. It's going to offer you a relatively small rate of interest and return, but you're going to have it completely safe and guaranteed, and there's no chance of it going up or down with the market movements. So either way, you open up a stocks and shares ISA through someone like ourselves at Redwood taking financial advice, or you open up a cash ISA at your high street bank and put as much as you can into that up to the £20,000 limit, and you will have maximised your allowance before the tax year end. But what are the other tax allowances that you might need to be thinking about that you perhaps haven't thought about? Well, there's a couple of different allowances out there, but just very quickly, another question to ask yourself before tax year end is, have you got any investments or assets that are subject to capital gains? And have you made a point of selling some of those down to make sure that you bank any gains and use your capital gains tax allowance? Much like ISA allowances, capital gains tax allowances are a use it or lose it allowance. You can't roll them up. And so again, it's important to make sure that if we have got investments, for example, that are pregnant with gains, we use those allowances to reduce and bank those gains down for you and make use of those allowances that you would otherwise probably not be using. You've also got to think about things like inheritance tax allowances. So there are gift allowances that you can do up to £3,000 every year of annual allowances, which you could be using to gift money out of your estate free of inheritance tax and not subject to the 7-year rule. So a good question to ask yourself before the tax year end is, are there any gifts that I need to make or want to make to my loved ones and beneficiaries? And if so, get them in as part of your annual allowance before the end of the tax year. The other allowance to think about is your personal income tax allowance. Now, for most of us that are working, we're probably using our income tax allowance every year without fail. But for those of you that are retired, you perhaps aren't having the same levels of income that you were when you were working, and you're also perhaps enjoying income from tax-free sources. Whether that's tax-free cash from a pension or investment income from things like ISAs. So it means that potentially your personal income tax allowance is going to waste. And therefore, again, another question to ask yourself is, should I be taking some income from taxable sources, if you've got taxable investments, for example, that will then help maximise your personal income tax allowance before the year end? So those are just some questions that you need to ask yourself, but really the best thing to do is speak to either your financial advisor, who can give you taxation advice with regards to your investments in the best way possible, or your accountant if you have one, again, to help make sure that you're maximising all of those tax allowances before the tax year end. If you have any questions, of course, please don't hesitate to get in touch. Either message us on the website or give the office a call, and I look forward to answering more questions next week.